All right, everybody, welcome. Doug McKay, antiwallstreetguy.com. For the 18th of May, 2012, this will be the third week in a row that we have the overall trend is neutral and or down, which for our purposes would mean cash or short. I believe the S&P has been down 11 out of the last 13 days, and the 2 days that it was up were basically just above the flat line on a close. Oversold, but could continue to be oversold. Let's throw a Bollinger Band on it. Again, in most situations, you're not going to close outside of the Bollinger Band more than 2 or 3 days in a row. This Bollinger Band is expanded as price drops. But again, we had a close yesterday below the Bollinger Band, today above the below the Bollinger Band. So oversold conditions, but it could continue to be oversold. When we open this up, and we'll come back to a daily chart, when we open this up to a weekly chart, the last time that the put-call ratio, which is a contrarian indicator, considerably more puts than calls, the last time the put-call ratio was this high was right in here, which was a low back in August of 2011. So we'll see. I don't think that this is a bottom today. I think that we will rally. Of course, we've been saying that Monday or Tuesday of next week, but I think there's going to have to be some space in here before we put in any type of interim low. In other words, I think we'll go up, we'll spend some time going sideways, and then we'll put in one more low to shake people out. I think that the 50-day moving, or I'm sorry, I think the 200-day moving average is a target. You cannot see it on this chart, but that's around 1265. When we just look at support and resistance, same thing. We're right here at about 1270 is support, 1250 is support. We don't have to go right to those numbers. We could stop short of those numbers, or we could exceed them. But the overall trend, again, for the third week in a row, once we broke through 1380, which was the 50-day moving average of 20 and the 30-day, right in that range, is down. And it has come down hard. Very similar to this waterfall last summer. Let's take a look at it again on a weekly. Really not even any chance for any type of recovery at all. We are 90% cash. In the managed accounts, we should be 100% cash. That is my fault. Earlier in the week, we played a bounce here based on the oversold condition around 1340. So we're down about 3.5% on roughly 10% of the account. So we're down less than 1%, but in any event, I don't want to be down at all. We will make that back. We're probably down 0.5% on the total account, but we'll look to make that back. So I'll make some adjustments next week. That could be buying individual stocks. It could be adding to the S&P. Maybe we get out of half the position. Maybe we wait for a lower low. So we'll look at the charts, or I'll look at the charts next week. What else? Let's go back to a weekly like we have for the last 4 weeks or so. Just to refresh, remember we thought this was either 5 waves up or an ABC correction. So let's start out with the 5 waves up again. Wave 1, top of wave 1, bottom of wave 2. Wave 3 is a long wave. Wave 4 is sideways. And wave 5 would be up through the top of wave 3, out of wave 4, which would take us up roughly 1,500, possibly higher. It is still possible that we are in a wave 4, where we could stop around 1280, 1290, 1265, and then just slowly make a series of higher highs, higher lows, and break out of this top of third wave, out of the fourth wave, and go to a fifth wave. That's still possible. That could happen. Or we could be in an ABC. A, B, C, as we mentioned several weeks, or at least for the last 3 or 4 weeks. If it's a C wave, there is going to be no fifth wave up, and the ride is over, and this is a top. And if we were to take out these lows around that 1157, 1160, that is clearly a bear market. We are in a correction now. Now, whether or not we're going to go into a bear market, we'd have to really break that 1265 area, 1270, which is roughly around the 200-day moving average on a daily chart. But again, for the record, for the third Friday in a row, we have the overall trend is down meaning short in the equity markets. For our purposes, that means cash. If we're playing a bounce, we're going to make up any small loss with that 10% trade that we put on earlier in the week. All right, let's just look at gold, and then we'll wrap it up. This is a weekly chart. The candles represent weeks. This is a chart that I put out on Wednesday. Today's Friday. Chart I put out on Wednesday saying that we found support in gold. We think that this could be the eventual target. That doesn't mean that's going to show up. You don't want to wait for something to print, either to the upside or the downside, because sometimes you'll sit there and wait and the market runs away from you. Quite possibly this is an example. There's better support around 138, but this might have been a low that was put in for gold. The overall trend is down, but it is bouncing for whatever reason, either due to the fact that it's oversold or flight to safety or more QE coming out or whatever. A chart is a chart is a chart. The main reason I put this chart up on Wednesday, because I did think it was oversold, and I knew that on a daily chart, which is what we're looking at now, we have gaps. And those gaps have a tendency to be filled either to the upside or the downside. In this case, they would be filled to the upside. But we are below the 50-day moving average. You know, we'd really have to clear 162. We could come right up to 158, fill the gap, hit what was once support resistance, and start to roll over again. All right, you guys, so there could be some good buying opportunities next week. If you're going to do it, if I'm going to do it on individual stocks, we're going to have some stops tight. Even if we get knocked out a couple times, we'll minimize the losses, and then we believe a nice trend will wipe out those small losses. But be careful. The overall trend is down. We could go lower. You don't always know what's going on internally, but there's a lot of selling going on, obviously, on higher volume. But at the same time, the put-call ratio, a contrarian indicator, is the highest it's been since August of 2011, and that was at a cycle bottom there. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. For the third week in a row, we have the overall trend is down. We'll see you next week. Thanks.